Okay. Good morning, students. This is Mohammad Sadiq Hassan, Head of Department Accountancy, and my topic today of like to take is about investment accounting. Okay, so it's a chapter which talks about shares and debentures. So let us see first of all what I'll be giving you a briefing about what is it like, what are the different uh, theoretical part of investment accounting, and I'll be touching upon the basic journal entries in the postings which pertaining to debentures. Okay, so let's start first of all with the meaning. What is investment accounting? It means parking or investing the money for better returns. Whatever money we have, investment, we do investment and we get returns out of that. Okay. It is done by government, shareholders, individuals, etc. Everybody in this world likes to get return out of the investment what they make. So it's the same thing that way. It is done based on risk and return. So if the more the risk, more the returns, less the risk, less the return. So all this permutation combinations are part and parcel of investments. Now, in this particular chapter, there are two type of investment we need to study. One is about shares, and one is about debentures or bonds. Okay, so first I'll be giving you a briefing about debentures, shares, and then I'll be focusing on the debenture part. So let's see to the next part. Investment which gives fixed return on income like debentures and bonds, on which investor gets income as a fixed rate of return. So there are like investments in the form of debentures and bonds, and they get fixed return, that is in the form of interest. That's why it is also called as fixed rate of interest. Investors get income as fixed rate of interest. So no matter what is the uh, company's profile, a company's financial position, the the investor gets income in the form of interest. It is fixed. Okay, they don't have to worry about the return part. Okay. Then I said you there is another part of this in this chapter which talks about shares. Okay, so what is this? Let's see that these are the investments on which fluctuating returns are received like shares, on which shareholders receive dividend, which is not fixed. So if I talk about equity and preference shares, that comes under the second category where the investment is not fixed; it is fluctuating. Okay, so that's why they have said the shareholders receive dividend which is not fixed. If you see the shares category also, there are two categories of shareholders. One is equity shareholders and one is preference shareholders. Preference shareholders are paid first. What the word suggests preference, they are preferred first when the dividend is paid, and then after the preference shareholders are paid, any profits and all, if it remains, then it is paid to the equity shareholders. So that's why the dividend is not fixed. Okay. So these are the two categories of sums which we are going to study in this chapter, investment accounting. And when I talk about the interest and dividend calculation, it is to be always to be calculated on the face value or the nominal value of the securities actually of the shares and whatever is there. So on that we calculate interest and dividend. Okay. Now, if I'm talking about investment, I'm talking about two things. Okay. One is about the uh, fixed income that talks about the debentures, and one is about fluctuating income that talks about shares. So there are two categories here. If you see here, one is bonds and debentures, which come under fixed income category, and one is shares, which comes under fluctuating income. Okay. Here, the source of income is interest. Here, the source of income is dividend. Correct. And the face value here is rupees 100, and here the face value is how much? It is rupees 10. Okay. And definitely the risk is low because return you're going to get in the form of interest. So there is no need to worry. Risk is low, return है fixed rate of interest. And here, since it is fluctuating, the risk is high. Okay, कभी आपको you may get return in the form of dividend or to the equity shareholders. And if the company is having loss, then equity shareholders will not get dividends. So the risk is always high. So these are the basic two differentiation between the bonds and shares or debentures. Now, coming to the next category, that is let's talk about that talks about the debentures part. So, in debenture type of sum, there are two different terminology which are important in this chapter. You need to know there is X interest and cum interest. Okay, what is X interest? When the interest amount is asked or charged separately from the cost price, it is called as X interest. Okay, here the interest will be asked or charged separately. It is like the X interest we have to calculate interest separately. It is not including in the amount. Okay, so X interest is also called as cost. What about cum interest? Cum matlab including. So on the other hand, interest is asked or charged along with the cost, that is inclusive of interest. Matlab whenever the cum interest value is given to you, that will always include interest. It is inclusive of interest. That is your cum interest. X interest is excluding interest. Cum interest is including interest. Okay. So if suppose you want to find out X interest also when cum interest is given, so what you are going to do? You are going to calculate interest first, and then from that cum interest you're going to minus interest, so you get X interest. That's a normal formula when you're going to use in this chapter to find X interest. That is cum interest minus interest. So is this clear, students? The basic category till now is what we have covered is what is investment. What are the different categories of sum we are going to ask here? Like we have bonds and debentures, we have shares. Okay, and then what are the concepts which are there in debenture, that is X interest and cum interest. Okay. Now, when we proceed further, when we solve the sum, there are few entries you need to keep in mind, because actually we have a ledger account only which is asked in the question, but we need to know certain journal entries just for us to have a good hold on the ledger postings. Okay, let's start with the first transaction, that is purchase of investment. So when we are purchasing investment, this is basically about talking about debentures. Okay. As of now, I'm just focusing on the debenture part. That is the first part of this chapter. So debit what comes in, credit what goes out. So investment account debit to cash. Simple. So we have the rule of real account, that is debit what comes in. Investment in shares account debit. Investment in debentures account debit. Whatever debentures are there. When you purchase, the money is going out. Same way when you sell, money is coming in, debit what comes in, and that investment is going out. So debit what comes in, credit what goes out. Then whatever interest if you have received. So whenever you receive any amount that is in the form of money is coming in, so debit what comes in, and the name of the income is interest. And any interest which is outstanding still to be received in the year, mila nahi milne wala. So anything which is outstanding, it is a future asset, so that will be debited. And what exactly is the source of that income which is still to be received? That is interest that needs to be credited. Then whatever remember, student, whatever interest is there at the year end, it needs to be transferred to profit and loss. So interest, whatever form, it is always income. So it is on the credit side. Now that you want to transfer, it is going to come on the debit side. So it is interest to profit and loss. This is the year ending transfer of interest amount to profit and loss. Then, whenever see basically students, when there is a sale taking place, when you sell a investment, whether it is you may have a profit or loss angle. So whatever may be the case, if it is profit, PNL is going to be credited because PNL is a nominal account which says debit all expenses and losses, credit all income and gains. So in case of profit, PNL will be credited and investment will be debited. And in case of loss, again debit all expenses and loss. So PNL debit hoga and investment will be credited. So that's just a basic entry for just taking into account profit or loss. Is this clear, students? So that's the basic 6 to 7 journal entries you need to keep in mind when we go for solving of ledger account. So now you see this was pertaining to the journal entries. Same way when we move on to ledger account. So this is the basic format of debenture sums investment what we are going to solve. It has total date column on the left side, particulars, nominal value, that is face value, interest and cost, X interest. That is your debit side. Okay, five, 1, 2, 3, 4, 5 columns on the left side. That is the debit side, which represents it. And then on the right side we have credit side. That is date, particulars, nominal value, interest and cost. That is X. So these are the total 10 columns which we are going to prepare when we are going to solve sums on debentures. Okay. Now, students, usually when the entry starts, you can have the postings accordingly. You'll have the opening balance, so that's first entry. Nominal value in debentures. Whenever we want to get the nominal value, how we get the nominal value? It is number of debentures into 100. As I said, the debenture per debenture value is 100. So whenever you want to find out the nominal value of debenture, it is going to be debentures into 100. We'll give you the nominal value. Accordingly, interest calculation that I will show you when we actually solve the sum. But interest, whatever amount which comes here, and then the cost value, that is the x interest, that is excluding it. That's why it is called as x interest. Interest is shown separately. Okay. So whenever there's a question comes about come interest, you have to calculate interest, show it separately, and then from that come interest minus interest, and you get the x interest, that is cost. Similarly, when we purchase any debentures, there's two bank, same whatever the number of debentures into 100, interest and cost. This is the normal journal to ledger posting. Like you have seen here, purchase to no, it is investment to cash. So on the debit side of that particular account, ledger account, we write to bank because whatever payment is made in debenture, that is always in the form of check payment. Then if it is profit or loss, profit as said, it is investment to P&L. So on the debit side, like it's only when we sell. Like let's take this example. When we sell, we are selling. So credit what goes out. So it'll be see it is bank to investment. So on the credit side of investment, we write buy bank. Again, the same nominal value, interest and cost. And again, when we sell, there are I said there is a possibility of profit or loss. So profit agar hoga, so it is investment to P&L, to P&L account, and in the cost column we will be writing the difference. And if it is a loss, what is the entry? It is P&L to investment. So on the credit side of investment, we write buy profit and loss account in the bracket just for the reference loss on sale, and the amount is going to come in the cost. Then every they will mention they will give you in the question the interest due date. So that accordingly we have to see, and on that particular due date we are going to get interest. So that's an income, the interest received. That again by a bank account, and whatever interest is received, that is going to come in the interest column. Usually in a question you have two half yearly interest. There are two due dates, first due date and the second due date. It is first half yearly and second half yearly. Accordingly, you can pass the entry. Buy bank account interest column में यहाँ पे भी buy bank account in the interest column. I just missed out this part. You have to write down the amount in the interest column. And then again at the year end, when everything is fine, you need to close this account. So nominal value account you're going to close it first, and here you will find the debit side is low, so the balance figure will be by balance carried down, always on the credit side. And then whatever closing balance remains on that, if there's any interest, like if there's any interest to be calculated, that you're going to calculate here, get the amount if it is to be recorded. If you already taken, then it's okay. If there's any apart from the last second due date, if there's any still further interest months are there, year ending is there, and there is an interest due date which is not taken, so on that closing date you are going to charge interest. Then you'll take that also, and then take the total of interest. Then again you're going to minus. In the interest case, your credit side will be more because you have received interest, so it will be more than the debit side. And the difference, the balancing figure, will be to profit and loss account. And same, we're going to close the cost account. Again, debit side is more than the credit side, so you'll have the closing balance here by balance carried. So that's the basic structure of the debenture account. Here, here I wanted to explain you the concept of journal and ledger. And likewise, when you're going, we will be solving sums on share. That is the next part of this chapter. Here you will have almost the same format, but in the sense here you will have dividend in place of interest, because when we talk about shares, the source of income is dividend. Okay, so that's the only difference. And when we're going to solve the sums on shares, we'll be having few concepts like bonus shares. When the company earns a profit, then the company gives bonus to its existing shareholders, and that is given free of cost. So that's the concept we will also learn when we go to the chapter later on. And we also will be having concepts like right issues. Like what is a right issue? When the company wants to give the new shares, they give the option to the existing shareholders. So that is the right issue, the right of the existing shareholders to get the right for the shares. So that is definitely right issue. It is given at a lesser value than the market value, and in that case also shareholders, they may subscribe some part of right shares, and remaining what is not subscribed, the company can renounce. So company can sell to the savings. So all this concept we're going to study in this in the later half of this chapter, which when we talk about the shares part. So and then we'll see the pro rata basis, like how many shares are held accordingly company gives the bonus, that is called as pro rata. As per the existing shares, company allots bonus shares, company gives right shares, whatever, so that is called as pro rata. That also we're going to study gradually in the later half of this chapter. This is what I wanted to convey as a basic brief of this chapter, which talks about investment accounting. So thank you. I hope so things are clear to you. Thank you.